UPS shares jumping on better than expected results. Join us now, Ken Hoexter. He's Bank of America Securities Senior Transportation Analyst. The stock has been reflecting, I guess, some angst that a lot of the transportation stocks have been reflecting, but it's up today. There's the big move up 10 points, but it has been a rough couple of quarters as far as stock performance, Ken.
Yeah. Good morning, Joe. And Andrew, congratulations on the book. And good morning, Becky. I'd say, look, volumes are down 10%. Joe, even in this quarter, they're down double digits. They lost 100,000 packages a day year over year, given Amazon's moving 50% of their volumes off. The stock is up because the company took $250 million charge to get rid of some costs. So they're trying to make a move to get rid of costs to adjust for all these lost volumes, the slowing economy, the loss of the de minimis volume. So you've lost a lot of share. And I think their outlook is now starting to say, hey, we might have hit the bottom in terms of some margin outlook, and we're taking some of these costs out.
You know, the UPS, the stock, I guess it doesn't lie about how the economy is, because the economy is pretty good, isn't it, Ken? But if goods aren't being moved, I mean, that's the bottom line, is it not? Because that is a measure of economic activity, is it not?
Yeah, absolutely. No, the whole transport sector that we follow, right, is all tied to the economy, right? You've got trucks lead, then you've got the railroads. Air freight is the most concurrent group. So when the economy is not moving, we do a biweekly truck shipper survey, and it's been in a freight recession level for over 3.5 years. So the data is still telling us we're in this muted backdrop. I think, again, what you're seeing today with UPS's share reaction early this morning is their move to aggressively cut costs to match the fact that volumes are still not there. You've got a very leveraged company. When you don't have volumes, that negative operating leverage kicks in, and that's why you've seen the stock get hit. That's why you've seen the company get hit, and that's why they're making moves to cut these costs.
So it makes you think that there's two economies, and to some extent, or maybe it's AI, or there are a lot of companies reporting solid results. Why isn't that being? Why is it bifurcated like that in your view? I know you're a transportation analyst, but why do you think that we have a feeling that it's not the entire economy that's not clicking? Some of it is.
Yeah, look, the services side is still, in that post-COVID environment, we've got a lot of goods moving, or a lot of services still coming into play. But on the goods side, we did have pre-shipping ahead of tariffs earlier this year. That staged a lot of stuff. That meant stuff is not moving for months now, or a lot less is moving. And so you're going through that withdrawal of that buildup of inventory through the system. And so we're still in a very muted demand environment for goods. We've been in this, like I said, freight recession for 3.5 years. We continue to remain in that. We're just trying to find that floor. It's not getting worse, but it certainly doesn't seem to be taking off. But again, now companies are making moves to cut costs to align for that lower volume environment.
Well, looking at that chart right there, Ken, there's more going on, secular things going on with UPS's business. What else? I guess competition?
Well, we mentioned Amazon's pulling 50% of their freight from that network. That's about 10, 11% of what UPS moves, or their revenues, 20% of their volumes. You've got tariffs, the end of de minimis, so you've lost all those small packages coming from Asia. Were suspended earlier this year, so you lost a lot of volume from that. And then, with the post office stopped moving, allowing UPS to allow to move their shore post volumes, those low value, lightweight products that they used to drop into the post office for last mile delivery. They took all those costs onto their system. So you've got a lot of dynamics within the air freight group, aside from the fact that with the decelerating freight economy, just not seeing as much freight movement.